Hello, namaste, and welcome back once again. Well, by now you've learned almost everything that is to learn about money. Insurance is bhi samajh liya, mutual funds is done, financial planning is done, budgeting is done, basics are done, very well done. And by the way, if you're watching this video for the first time, this is a course, not just a standalone video. So do check out all of these videos that I was just talking about. But in this module, we're going to cover the introduction to credit cards, and I'd say a little bit of loan planning as well, because that is also a very crucial aspect about our overall personal finances. And once you're sorted with this introduction, we will be coming up with a lot more detailed videos on the latest credit cards as well as how do you optimize your loans. Welcome back to this module where we're going to talk about credit and loans. A very important aspect of personal finance, something that we generally do not pay too much attention to, but if anything goes wrong with this could really bring us back on our journey towards financial freedom. So let's study about credit cards and loans. Credit cards. Credit cards are said to be our best friend, but at the same time our worst enemy. Why so? Best friend because in case of any emergency, if let's say we don't have enough money, either in our bank accounts or as cash with us, credit cards could come to the rescue. You could swipe in your credit card where required, and then by default you get 40 to 50 days in order to pay that money back to the bank, interest free. So well, yes, whenever you're in emergency or in general you need money and you don't have that enough money in your bank account, you could use credit card. On top of that, it gives you a number of rewards, points that can be encash for money or that can be used on various other platforms. So yes, because of all of these reasons, it is called to be the best friend. But at the same time, it could also become your worst enemy, which means that if you're not disciplined with your spending habits, you overspend money, which means you owe a lot of money to the bank, then in that case, it could act as a worst enemy. And when I say worst enemy, the banks could charge you up to 40%. And in fact, even more than that as interest rate per annum. So which means if today, you remember the rule of 72? Let's say 36% on an average is what the bank is charging you. So you're making the bank's money go double in a span of 2 years, 72 divided by 36, 2 years. And so the compounding is working wonders for bank, but not for you, right? And that's why we've got to be very careful when it comes to spending on our credit cards. I would say to begin with, as a beginner, yes, we all must apply for a credit card, but we must put the maximum limit to 50% of our monthly income. So let's say if you're earning 50,000 rupees a month, you must have a limit set of only 25,000 rupees on your credit card. And the reason being, you must use your credit card when you're out there shopping, but you must be disciplined with your expenses. You must not end up spending much more than what you even earn. And so setting up this limit will refrain you from spending more. And once you eventually get in the habit, you know that you're spending only that amount of money on your credit card, which you actually earn, and you're able to pay your bills in time, you can increase your limit. Go ahead and increase it to 70%, 80%, 100%, and then so on and so forth to maybe even 200, 300%. Because at that point of time, you know that you are disciplined. You are not going to just keep swiping your credit card here and there, and then at the end of the month when the bill comes, you're like, oh shit, how do I pay for this? I'm telling you honestly, I know of people who've taken a personal loan separately just to pay off their credit card bills. So please don't get into that habit. Do not delay your payments at all. Whatever is the bill date, due date, pay your bills on time. The reason being, once again, when you go and pay your credit card bills, you have three categories you'd see, right? Minimum payment, full payment, and any other amount. So generally, let's say if your total bill is about 30,000 rupees, the banks, they put up a minimum payment of 2,000 rupees. And we think psychologically that if I do this minimum payment, the banks might not charge me an interest rate. So let me share the reason behind this, the logic behind this. The banks have two types of charges: a late fee and then an interest charge. So if you don't pay even the minimum amount, the bank would charge you a late fee penalty plus an interest rate on the outstanding amount. Now, if you pay the minimum payment, only the late fee goes away. The bank will still charge you that interest rate on the outstanding amount, which could amount up to 40% in an annum. Even more than that. This is done just to play with your psychology. In fact, there is a documentary on Netflix called Money Explained. Do go and watch that. It clearly describes why this is done. Right? So, all in all, please be disciplined when it comes to using your credit cards. I'm telling you, you could earn a number of points. You could earn bonus miles to book air tickets. You could get a number of vouchers to go out for dinner, to watch movies, so on and so forth. But at the same time, if you get into the trap of overspending on your credit card, then coming back gets very, very tough. So once again, your best friend, but your worst enemy. So be careful, but at the same time, use it to the best of its advantage. Thank you once again for watching. I really hope you found it useful. Please don't forget to like, share, and subscribe to the channel. Put in all your questions in the comments. And yes, go there and let your friends know about this course, which is available absolutely for free. Make the most of your money.